There is something very interesting happening in real estate investing right now, and many people are missing it. And that is a growing number of small landlords are choosing to sell their rental properties. I just came across an article by Scott Aubrey, who is with Rent Perfect, and he talked about this concept called the Landlord Exodus. And while that might sound scary on the surface, I actually think it might create opportunity for strategic investors in the next decade. I'm Jonna Weber. I'm a real estate investor, and I'm here to help you build wealth through real estate without creating a second job. Welcome to Real Estate Investing for Life. Be sure to stay to the end of this episode. I'm going to be sharing a key tip that a lot of new landlords can employ this year to have an operating rental by the end of the year. Let's get into why some of these landlords are leaving. There are a lot of pressures, I should say, that people are paying attention to. One, in a lot of areas, property taxes are rising. Second, their insurance could be skyrocketing. This is especially prevalent in areas that are impacted by fires or hurricanes and just general overhead for insurance in general. Three, there are higher maintenance and labor costs. I know we have personally seen that for our own turnovers lately. Next, there are higher interest rates. And so rather than selling one and going into another rental property, sometimes they're just taking the rental off the table completely and putting it into something else and taking that tax hit. Next, there are increasingly more regulations and evictions timelines. And last, some people are just burned out from self-managing. Maybe they've been self-managing for 2 years, but maybe it's 20, 30, 40 years, and they're ready to get out of the game. But what we're not saying is that real estate is dead. It's very important to know that because it means the easy era is over. You know, a lot of people entered the real estate investing game kind of accidentally. They were accidental landlords. They had to move out of area, kept their house, or they were just small investors and they entered under low rates, easy appreciation, cheap debt, and a very strong rental market. And some people bought assuming appreciation would save them no matter what. Now let's get back to this article. When people hear negative headlines, landlord exodus, they often assume opportunity is gone. But historically, some of the best long-term opportunities show up during periods of stress, uncertainty, and transition. For every fatigued owner out there, there is potentially opportunity. These are not necessarily distressed sellers, but emotionally exhausted owners. They might be tired of tenant calls, unexpected repairs, managing from another state, retirement age in general, so they want to go travel and don't want to be landlording anymore. They might have inherited rentals and they might have negative cash flow from poor financing when they just banked on appreciation. So an important perspective for us is to think about why we talk so much about strategy over hype. It's because strategy is necessary to succeed in today's real estate market. And the goal isn't to collect the most doors possible. The goal is to own quality assets that support your life. If you've been investing anything over a number of years, whether it's real estate or whether it's something in the stock market, you know that there's opportunity when other people are running. So what I believe this may create over the next 5 and 10 years is opportunity. Some of the potential opportunities that I was thinking about are better buying opportunities, less competition from casual investors who say it's so easy, more motivated sellers. There's a lot of older properties, small multifamily and even single family that are coming available. They might have some deferred maintenance, but they also might have great opportunity and be in exceptional areas. And our investors going into this market will have more negotiating leverage. I believe that the investors who survive this season are probably the ones who will look brilliant a decade from now. I remember when I was investing, starting seriously during the recession, and it was scary. Real estate was going down, 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 down as we were buying some things. And people thought we were a little bit nuts, but when you have fundamentals in place and you are buying from a strategic position in which you're not putting all your eggs in one basket, there can really be opportunity, especially for high income earners that want to put their money into hard assets. So part of my philosophy is to be very conservative. We need to talk about reserves, about having patience, long-term thinking, good property management. And I love the idea of fewer, better assets. Avoiding creating another stressful job because, as you know, this is real estate investing for life. We want you to have a life. We also want you to take advantage when there's opportunities. You may hear concerns that big institutions will own everything, but I actually think there will continue to be tremendous opportunity for thoughtful, relationship-based local investors. I'm thinking about even when I've had recent vacancies, many of the tenants are asking, in particular, whether it's a small investor that owns the property or whether it's an institutional investor. And more often than not, those tenants are seeking out the smaller investor to have that relationship and good experience down the road. If you are a high income earner or someone sitting on the sidelines waiting to get into the investing game, you're watching this or listening to this, and I want you to know now is not the time to panic. It's time to really get educated and become strategic and get aligned with what your particular goals are and see if owning a long-term rental property is the right move for you. So what I would focus on are strong markets, long-term holds, quality property management, conservative underwriting, fixed rate debt when possible, cash reserves, so important, and lastly, simplicity. Because I think the next decade may reward disciplined investors far more than those flashy investors. Every market cycle creates fear somewhere, but often underneath the fear is transition. And transition creates opportunities for people who stay calm, think long-term, and buy wisely. If you're looking to see whether a long-term rental property makes sense for you versus a more passive investment, this is where I come in. What we can do is hop on a private strategy session and really go over your particulars, your goals, your end game, and we can see what makes sense for you. And as promised, I was going to put something at the end of the episode that's a tip that a lot of high income earners can employ this year. And that is the idea of, if it makes sense with your property, turning your primary residence into a rental property. I coach people through this all the time, and we've had some of the biggest jump starts in wealth creation through real estate investing through this strategy. That is, if your property makes sense, if you enjoy a low interest rate and have a very reasonable payment, consider turning that into a rental property and moving up or over into your next primary home, enjoying all the benefits of a primary homeowner interest rate and also lower down payment if that's what you choose. It really gives a lot of options. I know we have a rental property that we lived in for 9 years, turned into a rental, and have held it 10 years as a rental now. And I am so grateful for that simple decision. So if you can qualify for the next loan, move into it and keep yours as a rental property, that makes sense for a lot of people. Again, happy to talk that through with you and make sure we run the numbers and see if it makes sense for you. Thanks for being here today. So glad you are. Let's go through this transition together and take advantage of opportunities. Have a great day, and we'll catch you on the next episode.